good then to get the editor's take as well. Nikunj, it looks like we've started the day with those headlines coming in that we were fearing, which is the Iran as well as Israel explosions have escalated for now, and we are seeing the risk of more with the equity markets tumbling and crude spiking.
So Nisha, we know the news. Now let's understand the impact of the news and let's understand the backdrop here. Now the backdrop, irrespective of the geopolitical tensions in Middle East, has been slightly noisy and slightly not very favorable, at least for the bulls, which is that FIs have been selling irrespective of the geopolitical development in Middle East. The entire month of April, the biggest crack for us has been that foreign institutional investors really have been selling into large cap stocks. Second, the US Fed interest rate narrative, beginning of 2024 versus now, talk of 4 to 5 rate cuts. Now we could be looking at 1 or even no rate cuts. That's the narrative number second. Till yesterday, I think markets were convinced that geopolitical problems may not really spill over into a domino effect. But looks like we are in for some further development which will aid to tensions. So for a weak market where momentum in a sense was getting sapped and large cap selling was evident, and yesterday when we were doing the closing show, it was evident that the selling actually surfaced up, and more than selling, it was short selling which was getting fueled in the market. I think that trade clearly will extend itself. What you could ask yourself is that what is the difference between the sell-off, what we saw in the month of March versus now? What we saw in the month of March was more like a localized sell-off. It was triggered by margin compulsions. It was triggered because valuations in the small and the mid-cap stocks were very obese. So that was more like a localized correction. It came and went. And there was a lot of global support that time. This time the difference is that the global setup is not very conducive. And it's not just the geopolitical setup. It is the surround sound along with the geopolitical setup, like I said, Fed, or what we've got in terms of earnings. It clearly points to some choppy days ahead. And that really could be the construct. So I think you got to fasten your seat belts, just be an observer. There is no point in trying to say that, okay, I'm going to be buying the first fall. Because the problem with this entire global setup is that it may just linger on slightly more. And when things may just linger on slightly more, you said, look, I'm going to be buying when there is clarity rather than trying to really fish for the bottom. Because you could have made a case like we made in the month of March that you should be a buyer because the global cues were strong. FIs were not selling. Crude and other macro variables were in your favor. But currently it appears that you're getting hit on the global front, on the macro front, on the interest rate front, on the liquidity front, and that typically happens. And when you have a setup like this, you're better off really observing the market and then taking a fresh guard once one of these 4 or 5 factors which I just mentioned, they turn favorable.
Fair enough. That's really how one should be approaching the overall news right now. And looking at what the rest of the globe is indicating, we are in for perhaps a shaky start. And, Nikunj, this coupled with the fact that we also have the FII selling that is taking place, do you think that sort of leaves the door open right now for further downside? Is this the big event that we were talking about that could perhaps lead to a lot of choppiness?
So, Aman, I guess markets were due for a correction at a global level. And the problem is more global in nature, it is not local in nature. I don't think you've reached a point where you would say that, okay, this is the local problem and Indian markets are correcting because of this local problem. It's very global in nature, whether it is crude, interest rate curve, how yields are spiking up, or which way things essentially are moving on the geopolitical front. So if the headwind is global, the solution really has to come from the global market, which is that, okay, the geopolitics, it starts stabilizing. Markets show a very mature reaction, and within 3-4 days from a financial market standpoint, things just stabilize. Crude does not spike. other interest rate instruments, they don't spike. That also would be a good sign for, that also could be a good indication that, okay, things are stabilizing. See, the initial reaction to the Ukraine-Russia war was nothing short of scary, but markets have learned to live with it. I mean, it's not that the war between Russia and Ukraine has got sorted out, but from a market standpoint, it has really gone on the back burner. So wait for that time. I mean, I don't think anybody wants a war. You never say with geopolitics, but the situation is such that nobody wants a war, and nobody can afford a war right now. So this news, eventually, if it does not have a large impact on the financial market in a week or 10 days or 15 days, it will just settle down. Where you need to be a bit watchful, or where you need to be just, keep your eyes open, is that in this fall, if you're getting some stocks which are unnecessarily getting battered down, maybe something in the small cap space, maybe something in the large cap space, where stocks are falling because of the sentiment and because of liquidity. That's the time you want to be a buyer. For example, if defense stocks, they fall a lot in this fall, you should buy them. For example, if some of the auto stocks, if they fall a lot, you should be buying them. What if some of the EMS stocks, they fall 10-15% from it, you should be buying them. So you need to have what really could be called as a smart, watchful strategy. Wait for your entry points in this market fall, which is not looking very scary to me as of now, but I guess some imbalances will get created, and that's the time you really want to be treasure hunting.
That's the view coming in, the editor's take. Let's bring on.
If you like this video, then like, share and subscribe to ET Now.